Welcome to another video from Creativo Solutions. You're currently watching the British International Distance College Accounting Module video series, and I'm taking you through Assignment 2. We do offer private tutoring, and you can find information on the website. Consider following us on Instagram and Twitter, and keep watching the YouTube channel for more support. The third-party disclaimer: all the material in this video is obviously based on information, products and services by some third parties. I cannot guarantee the accuracy of the information contained in the third-party material. All trademarks appearing in this guide are the property of their respective owners. In the IGCSE Accounting Assignment Pack, one of the rules states that all resources may be used when answering assignments, including textbooks, the internet, tutors, etc. Creativo Solutions is a private institution and is in no way connected to the British International Distance College. Any reference made to the subject material referred to official BIDC material, and we do not represent them as our own. We simply work through the BIDC material with students as a means of additional academic support. We have completed question 1, 2, 3, and 4. We are now going to be looking at the last question, which is question 5 of Assignment 2 for the accounting module. Let's begin. Question 5 of Assignment 2 is on page 36 to 37 of the assignment pack. The question starts by stating, Walter Fisher started a business on 1st August 2016. The following are the transactions for his first month of trading. Enter the transactions in the books of Walter Fisher, balance the cash book and the personal accounts at the end of the month. Take out a trial balance as at 31st August 2016. Then they've given you all the different transactions, and we have quite a few here for different days. So we're going to have to create a cash book. That's what they've asked you to do. They said enter the transactions in the books of Walter Fisher, balance the cash book and the personal accounts. They haven't given you more information other than the transactions, so it's going to be a little bit difficult to identify what exactly do they want us to create in terms of a final solution. Their solution could probably differ a little bit to ours in terms of the journals that we're going to be creating. If I look at the actual transactions, I need to understand what is the focus here. Is it cash or is it credit as well? We know they said balance the cash book, but let's see what they have in the actual transactions. So I'm scanning the transactions to see what we have. They said capital, so that's contribution, then paid rent, that's a check. Bought goods on credit. See, there's the keyword. When I see the word on credit, I know there are credit transactions here as well. So I am going to create all the journals. I'm going to be as comprehensive as possible to try to give you the best possible solution I can create in line with the information that we have in the question. So I'm going to start off with the cash receipts journal. I'm just going to write in the month here. This was the 1st of August, so August 2016, and this is applicable to Walter Fisher's business. Walter Fisher. And I'm then going to have different journals for all these different transactions. I'm going to start by looking at the cash receipts journal. So I'll have document, day or date, details, analysis of receipts. I'll have bank. I'll assume we'll have a sales column. I'll assume we'll have a debtors column or a trade receivables column. Let's rather use trade receivables. Trade receivables column, and obviously sundry as well. Sundry accounts, which will have the amount and the details. And that's the basis for our first journal, which is the cash receipts journal. We'll skip a few lines. And then we just need to create more of these journals. So I'm going to have one for the payments, cash payments journal. You'll have details here. You could have payee here if you wanted to. There won't be an analysis column. There will definitely be a bank column. I'll assume we're going to make purchases. Again, all these different columns could be anything in particular, because remember, the company decides what columns they're going to be creating in each of these journals. You could literally have a column for every single possible account, but transactions that occur more often that affect specific accounts normally have column names. So purchases, you should be making purchases, and there should be some cash payments for them, and therefore that should be a column. There could be a column for trade payables, because you pay your creditors, and there could be anything else. I'm going to leave one column blank. We can insert more specific accounts if we need to, or actually let's delete the account, because then we'll use sundry for all the others. So we'll have sundry account, and we'll have the details listed in that particular column. Great. We read, or I scanned the question, and I could see there were credit transactions. So I am going to draw up journals for them. I'm going to draw up a sales journal for August 2016, and the sales journal will have the same thing here, except two columns, one for the trade receivables and one for the sales. There's the sales journal. And I also want a purchases journal. Purchases journal, and here I'll have the payables, and I'll have the purchases that are made on credit. And that's the starting point. Obviously, from an exam point of view, they will give you guidance in terms of what journals they want you to create and what columns do they want in each of the journals. Right now, we're just looking at this as best as possible in terms of trying to be as comprehensive as possible by covering all the possible journals in this particular question. Now we're going to go back to the first transaction. We're going to read it, and then we're going to record it. Transaction number 1 on the first says, Walter Fisher put capital of $45,000 into a business bank account. If he's putting capital into the business's bank account, remember everything is from the business's point of view. The cash receipts journal will record that capital contribution. So on the first, the details here, we know Walter Fisher's the owner. And he's contributing 45,000 into the business's bank account. So that'll be seen as a capital contribution. Analysis of receipts, remember that column has a very particular, let's say, rule or purpose. It's used to record any amount that's then actually deposited into the bank account. So we'll assume that's cash. Most likely it was probably a transfer from one account to another, so it'll just be sitting in the bank. But often you see that account analysis of receipts. I'm going to include it just for a discussion purpose, just to make sure that these are more comprehensive, so you have an idea of how to approach these journals. Next transaction. On the second, paid rent of premises, 310 by check. The keyword is by check. I now know this goes to the cash payments journal. This occurred on the second. Did they say who I paid? No, they didn't. So I'm just going to call this cash. It's a cash check for 310, which was made out for rent expense. Next transaction. The transaction states we bought goods 2,500 on credit from Hazer and Company. So if I'm buying goods on credit, this will go to the purchases journal. So there's purchases. I'm going to record this. This occurred on the 6th day of the month, and I bought from Hazer and Co. How much did I buy from them? I bought goods to the value of 2,500. So goods will be part of our purchases that we're going to be making for that particular company. Then also on the 6th we have cash sales of 750. So we know this is a cash receipts journal. It's a cash sale, and I'm going to record that here. Cash sales, and the analysis was for 750. So now we know this is definitely cash, so I'm definitely going to have to record that in the bank accounts. So it goes into analysis and bank. This is for sales, so that goes into that column as well. Great, and that's another transaction recorded. Number 8 said we paid 600 Rand cash into the bank. So we're paying cash into the bank, meaning this business would have had cash on hand that they've now deposited into the bank account. So I'm going to write a separate general journal entry for this. And the general journal would be debiting the bank. Just to show rules, asset increase, you should be familiar with your accounting elements. I've always discussed accounting elements and the importance of using the elements when interpreting transactions. So if you still don't know how to do that, there is a video on YouTube that you can have a look at that describes how to apply your knowledge of the rules to different transactions. I'm going to put a note here, transfer, narration, transfer of cash to the bank accounts, and the transfer was for an amount of 600 Rand, $600. 13. Sold goods 1,400 on credit to Zygon. Okay, so if I'm selling goods and it's on credit, this goes to the sales journal. So there's my sales journal. I know this occurred on the 8th. No, on the 13th. This was on the 8th, so I need to put that in. 8th of August. 8th Aug there, and let's put in the sale. This occurred on the 13th. On the 13th, we sold goods, $1,400 on credit to Zygon. 1,400 is the total for the sales. Then we've got the 18th. Settled Hazer and Co.'s account by check, less a 2% cash discount. So we saw Hazer earlier. We know we purchased from Hazer, so they're seen as our creditor or trade payable. So am I going to be paying them? Yes, I am. If I'm going to be paying them, I'm going to have to record that in the cash payments journal. So in the cash payments journal, I'm going to use Hazer and Co. And I'm making a payment on the 18th. The payment was for the account. So settling the account less a 2% cash discount. So we know Hazer is owed 2,500. So the trade payables is going to go down by 2,500. The bank is only going to be the net amount, so minus a 2% cash discount. So minus 2,500 times 0.02, 2%, gives us the amount that we actually pay. Then we've still got the discount, which is discount received, and we received a 2% discount. So 2% of that amount is 50. So in terms of bank, the payment that we would have made would be 2,450. That is going to be paying off a total liability of 2,500. And the discount that we're recording there is going to show the benefit that we receive for not having paid the full amount. That occurred on the 18th. Then still on the 18th, they said bought further goods. So that means, so we settled the account by check. That was the first transaction they said. And then they said we bought further goods on credit. So now we're buying more goods from same business? Yes, Hazer. So we paid off what we bought previously and now we're buying some more. So on the 18th, we bought an additional $1,950 worth of goods, and that'll be considered purchases, which would go to the purchases journal. Day 21, bought stationery and paid in cash. So if I'm buying stationery, I'm going to be affecting the bank. The 22nd, they said it's cash, so a cash payment for stationery. How much stationery did I buy? $14 worth of stationery. Don't have an account column for that, so I'm going to record that in sundry stationery. Still on the 21st, Walter took cash, $25 for his own use. So if he's taking cash for his own use, that's viewed as drawings. So on the 21st, we have the owner again, so I need Walter's name. This was $25 for drawings, personal use. Then on the 26th, received a check from Zygon to settle his account after he deducted a 2.5% cash discount. So Zygon is a debtor. We saw what they had purchased from our business. They're now settling that account, taking a 2.5% cash discount into consideration. So this is going to be affecting the cash receipts journal. Zygon is the one paying us, so we're receiving from them. This occurred on the 26th. How much is their trade receivables going to decrease by? The full amount, because they're settling their account. So he's settling his account. The bank is going to go up by the net amount, so minus a discount of 2.5%. And we don't have a column for discount allowed, so we're going to have to show that there, which is 35. So discount allowed is seen as an expense that will be taken into consideration because we haven't received all of it. We only received a portion of it, and we allowed a discount of 2.5%. Is this going to go to the analysis? Yes, I will show that as well, just to be comprehensive in terms of the actual recording of the cash receipts journal, just to make sure we've got everything possible. Then on the 29th, sold goods 1020 on credit. Now we're selling more goods to Zygon, and this was on the 29th, and he bought 1020, which is the total sales figure that we're going to record in the sales journal for that particular debtor. So now we've recorded all the accounting transactions. I've gone through the list and we've recorded them where they need to go. If we go back to the instructions, they said, enter the transactions in the books of Walter Fisher. We've done that. We've captured the transactions in the journals. Then they say balance the cash book. Alright, so cash book meaning this. Let's total up. Equals the sum of all of that, sum up, and the same thing over here, sum up. So that's what I've done in order to balance those journals, okay, to total those journals in order to post that through to the general ledger. Then they said balance the cash book and the personal accounts at the end of the month. So personal accounts, that'll probably be drawings, maybe capital. They probably want you to affect those accounts at the end of the month. And then they say take out a trial balance as at 31st August 2016. So they also want you to extract a trial balance from the information that they've provided. So quite a few things here to do. So I'm going to create T accounts for all these different account names that I've got here. So bank will be a T account, sales will be a T account, trade receivables, and so on. And I'm also going to be looking at personal accounts, so I'm going to keep all the debtors separate and all the creditors separate. So we've only got 2 debtors and creditors here, while two individuals, okay, or companies, 1 debtor, 1 creditor. So that's not a very difficult task to do, so long as we can create all these T accounts. So let's create T accounts. I'm going to need a few lines. Let's see, that should be enough. Okay, let's add it. Let's make them a bit bigger. Right, so I'm going to start off with, let's go right back up to the top. Let's start with bank. So bank, sales, bank, sales. Then I have trade receivables. I'm going to keep all of them separate, but in this case I only had 1, so that helps a lot. Trade receivables, receivables. Okay, the trade receivables. The receivable here was for our debtor, so sales journal, Zygon. And let's go back up to the top. So we've done trade receivables. Then I need a column for capital, discount allowed. Capital, discount allowed. Capital. Discount allowed. Let's see what else we have here. So now I've created all those accounts. Great. Then bank, I've already got a column for it. Okay, purchases, we didn't have a balance there, so it'll be 0. We don't need to create one. Well, actually we do, because there are credit purchases. Okay, but I'll leave that when we get to that journal. Trade payables. There we go for Hazer and Co. So trade payables. Let's create a general ledger account. Payables for Hazer and Co. Let's go back up. Who else do we have? That's Hazer, that's fine, that's it. Okay, then we have rent, discount received, stationery drawings. Rent expense, rent, discount, stationery drawings. That's 2, that's 3, that's 4. So we needed one for rent, discount, drawings, and what was the other one? Rent, discount received, oh, stationery and drawings. So stationery and then drawings. Stationery and drawings. Let's go back up and let's see what else do we have. So now I've completed all of that. Sales journal, I need trade receivables, sales. Sales, I've already got a column or T account for us, that's fine. Trade receivables, I've got one for Zygon. Trade payables, I've got one. Purchases, I need an account for it. So last account that I need to create. Purchases. And now I just need to record. So in this particular question, they didn't give you any opening balances, and there wouldn't be any because they said in the question that Walter Fisher started a business. So if they started a business, there would be 0 in terms of opening balance for all these accounts. So we're creating all of these accounts. Let's do the recording now. If I go to my cash receipts journal, bank is going to go up by that amount, 47,115. That's going to increase bank, so I need to record that here. Equals, where's my total? That comes from the cash receipts journal. The cash receipts journal is going to increase bank, and this was at the end of the month, so 31st of August, total receipts from the cash receipts journal, and there's our first amount. What else do we have? We've got sales. Sales of 750. These are cash sales. So go to sales. We had sales. There's sales. Sales is an income. So it's going to go on that side of the account. This is on the last day of the month, so 31st August. This would have been going to the bank, cash receipts journal, and the amount is equal to the figure we had over there. Trade receivables. If I'm looking at a trade receivable, it means I'm reducing the debtors because they've paid the business, i.e. we've received from Zygon. Okay, so Zygon is going to be decreasing their account, so we need to go down to that bottom part. Okay, we've got bank and we've got discount allowed. Great. Okay, so there's trade receivables, Zygon. It's a debtor, so debtors have a debit balance, so the bank will affect this side of the account, and we also need discount allowed cash receipts journal. So the bank figure equals the bank figure that they received, or that they paid to us, or that we've received. So there's the figure, and the discount allowed amount, discount allowed is that amount, 35. Great. Okay, so bank and discount allowed. Right, I need to create a contra account for the discount, so that needs to go here, and it's referenced there with trade receivables. And the reason for that is there's the credit, so here's the debit, and the amounts need to be the same. So we've got trade receivables, we can put the name there, Zygon. From the cash receipts journal, 35 for the discount that we've allowed. Let's go back and let's continue going down the different accounts. Okay, so I've done trade receivables now. Sundry, I've got capital to record. Discount I've already recorded. I just need to record the capital. 45,000. Where's my capital? There's it. 45,000 is going to increase. Capital is credited. This is from the bank. 31st of August. I should actually put the date in because this was a specific date, which was the 1st. That's when they started the business. So on the 1st of August, bank went up because of the capital contribution from the owner. Let's go back up and let's keep going through our journal. So now that journal is complete. Now we need to look at the cash payments. There's bank. That's the payments that the business has made over the month, so 2799. That's going to decrease the bank account. So bank decreases on the credit. This would be the total payments from the cash payments journal. And the total payments equal, let's go back up, that figure over there, 2799. Let's go back. Purchases, nothing. Trade payables, we need to create that account. Trade payable relates to Hazer. There's a discount and there's bank for the trade payables, and we're paying, so it's going to decrease our liability. So let's go to Hazer. Where's Hazer? There's it. On the 31st of August, we'll have bank, cash payments journal, and we'll also have a discount that we've received. So the amount that we've paid amounted to, where's the amount that we've paid? There's it. And the discount here was 50. The discount that we received here was 50. There's it from our journal. And in our discount received tier count, I'm going to have to reference that from the trade payables, Hazer and Co. and there's the recording of the discount. So there's the debit. Just be careful with the discounts because that is a bit tricky. You might forget to record the actual discount, which you need to, because that's a separate T account. Great, that's the discount that we've received. Let's go back and let's continue going down the list. So trade payables I've now looked at. Rent expense I need to record 310. Then stationery and drawings. So rent expense 310. Where's rent? There's the rent. Okay, let's just reference it equal to the 310 there. That's referencing bank. Okay, this is on a specific date, so I should record the date for each of these. Rent expense on the 2nd. Stationery 14 on the 21st. Okay, stationery on the 21st for 14. Stationery is going to be debited because of bank. We've paid 14 on the 21st. Then also on the 21st, drawings of 25. Also on the 21st, drawings of 25. And there's the drawings that we've captured. Let's go back to the journals. Now we've recorded all of the cash payments. Now I need to record all of the sales. So if I'm looking at totals, I've only got 2 here, 2 different days. I'm going to record them separately. What you could do is you could group them. Okay, that might be easier because then you'll just show one account. So you could show it like this, where you've grouped it. That's a possibility. Or you could show them separately. It's totally up to you. Again, just for the purposes of being comprehensive in terms of my working, I'm actually going to show the workings in detail. So I'm going to show the actual adding of each of these separate accounts in the actual journal. So I'm going to record each one separately. Right, so Zygon 13th, Zygon 13th, there's it. It'll be a sale, so it's going to affect the receivables positively. And this occurred on what date? On the 13th. So 13 and 29. 13 and 29. 13 and 29. August. This was for sales from the sales journal. And we had 13 and the 29. August, 29 August, and I'm going to reference the sales journal. There's the 13th and there's the 29th. I've got the debits, I still need the credits. So where's my sales? Ah, there's my sales. So nice, you can see that quite easily here. I'm going to reference those sales here, and this would have come from paste the trade receivables. Trade receivables, Zygon, sales journal, and I'm going to need the same thing here in the sales as well. And we've got the reference. So there's my debits and there's my credits. That's perfect. Let's go back and let's look at the next journal. I've got purchases. Purchases journal for August 2016. I've got trade payables and purchases. This is Hazer and Co. If I'm looking at Hazer and Co, I'm going to be referencing that in the actual trade payables for purchases. So my trade payables, there's my trade payables. It's a liability, so it'll be increasing. What are the 2 dates? The 6th and the 18th. Great. Okay, so 6 and 18. 6 and 18 purchases. 6 and 18. 6 and 18. This is for purchases from the purchases journal. record that here, 6 and 18. 6 and 18 equals the 6. Where's the 6? There's the 6. And the 18th, where's the 18th? There's the 18th. Great, and I've got those two amounts. I still need to reference those correctly in the purchases. So there's purchases. Great. I'm going to literally take those amounts through. Purchases was that figure and that figure, 6 and 18. Great. This is referencing the trade payables, Hazer and Co. Because this was a purchase from a creditor, and therefore you need to record it as so. So there's the debits, two debits for 25 and 1950, and then here, same thing, 251950, trade payables. Right, the next bit had a general journal entry where they said you transferred cash through to the bank account. Okay, it's a bit strange because we didn't actually have any balances here. Unless you recorded the sales in a column for cash, you could then transfer that through to the bank. So I'm just going to record an amount here, because remember we recorded all the receipts and payments in the cash journal. So the cash journals had a cash receipts and a cash payments, and we recorded all of that here. And then we transferred all those accounts through to bank, because you would have transferred the cash to the bank eventually. So I'm going to assume that we had an additional account for cash here. So I'm just going to show that on this side. I'm going to put an asterisk, no opening balance. So this is an incomplete account. But for the purposes of this question, it will still work out and the accounts will still balance. So let's record the transfer for cash. So assuming we had a balance, the balance would have gone on this side, okay, which we didn't in this question. So I'm just going to do the transfer. So we'll assume that we had cash in the bank, in the cash account, and we had to transfer cash. If we transfer cash to bank, you're transferring how much? Paid 600 cash into the bank. So you would have had 600 leaving the cash, going into the bank. And this occurred on day 8. So the 8th of Aug. This would have been cash, general journal. And then I'm going to record, this was the 8th, bank, general journal. And that's the transfer of cash, assuming we had cash. So there should have been a balance here, which they didn't give, so I can't actually put anything in there, but I'm just going to record that as is. Right, anything else that we need to go and do? Let's see, we've done all of that, great. Okay, so the last bit is just to total up and balance all of these separate accounts. So when I have debits and credits on both sides, I'm going to be debiting, okay, the one account and crediting the other in terms of the brought down and carried down. So I can see that this side is bigger, so 31st August balance carried down, 1st of September balance brought down, and the balance I'll carry down and brought down will be the difference between this and that. So that is what you would have in the bank account. Sales, we can just total, or you can do balancing if you want to. I'm going to show it just because it's quite easy to do, just to show you the actual summing up of these amounts. And I want the same thing on both sides. I'll have this and I'll have that, balance carried down and balance brought down for that account. So there's my sale. Trade receivables, I am going to have to add and subtract, so we're going to do what we did here for trade receivables. Which side is bigger? That side's bigger, so if I add those two I get that. That's the total. This would be equal to this minus the bank minus that gives me that balance. And that will be the balance that I would carry down for the next period. Capital, nothing happened here. I'm going to leave it. Nothing happened there. Trade payables, balance the account. So, trade payables will have a credit balance. I'm going to need this. Okay, trade payables will have a credit balance. So let's put that there. Which side's bigger? This side's bigger. So if I add those two amounts, I get 445, which is right. That goes on that side. The balance carried down will be equal to 455 minus the bank minus the discount. Gives me the 1950. That's the carried down balance. That's the brought down balance for this particular account. I've added up my debits. I got that. I want that on both sides. I subtract those two debits from that total to get the carried down balance. Rent expense, nothing, 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 nothing. Purchases, I just need to sum up. Let's do it properly. So if I sum up, purchases will have a debit balance. So let's add those two amounts. 4450, perfect. Carried on the balance, great. That's purchases. And then cash, okay, we didn't have a balance, so we can't balance this account. We'll have a credit for cash, which seems unusual because, as I said, we don't have an opening balance. Perfect. Now we need to create a trial balance. They said take out a trial balance as at 31st August. So what does a trial balance look like? Well, it's quite simple to create. Trial balance for Walter Fisher for on what was the date? 31st August and 31st August 2016. That's the year. Debit and credit side. Two sections, so financial position section, nominal account section. Nominal account section, great. And now I'm going to take through all my accounts through to my trial balance. Okay, so bank, we had cash, I'm going to put that in there. Okay, asterisk, part of the bank. Okay, no opening balances. Just as a note that we spoke about earlier. So let's record that. The bank will have a debit balance. Where's my bank? There's my bank balance. And the cash had a balance on this side, which was 600. After bank, we've got sales, then trade receivables. Sales, trade receivables. Let's put that in. Sales, trade, receivables, Zygon, as far as I know, that was right, eh? Yeah, Zygon. Okay, so sales was that figure. Ooh, be careful, sales is a nominal. I made a mistake there, I apologize, that should have gone there. Okay, that's better. Right, sales There's the sale. Trade receivables. There's it. Perfect. Capital's the next account. Capital goes here. Capital will have a credit, so go up to the top. Where's my capital? There's my capital. Then I've got discount allowed, part of this section. Discount allowed. Get the balance. There's the balance. Then trade payables, Hayes & Co. Hayes & Co. And record the amount. Where is it? There's the amount. Then rent expense. Okay, I can actually delete some of these lines because it's not necessary. We'll probably be able to see more of this. Yeah, that'll help a lot. Much easier to reference amounts when you can see them. Okay, so rent expense, we just need to record that in. Rent expense. Equals, my rent expense is there. Discount received. Discount received. Discount received. There's it. Stationery, drawings, purchases. Stationery. Drawings, purchases. Stationery, debit, equals, where's the stationery? There's it. Drawings was 25, drawings was 25, and purchases was that amount. Okay, and then after having done all of that, you're obviously going to total up both of these columns. Equals sum of those two columns, and that should happen. Okay, you should be able to get your debits equal to your credits. If it does balance, your trial balance is correct, meaning you've captured the debits and the credits correctly. And that was it. That was the end of question 5. They said take out a trial balance as at the T. That was fine. And they said balance the accounts, which we did balance all the accounts that we could possibly balance. Great. And that covers assignment number 2. Thank you for watching this video.